The clock has struck 8 and that means it's time for your daily market dose Corporate Central, where we get you the everyday pulse of the corporate world and also highlight all of the market fluctuations taking place for you and followed by the triggers that could impact the business environment. But first, let's find out what took place in the corporate world today. First, after suspending all operations on 3rd May, troubled carrier GoFirst has approached DGCA to seek takeoff approval with 22 planes for the next 5 months. It noted access to 400 crore rupees of funds under government's Emergency Credit Line Guarantee Scheme and other unutilized credit, while it needs 200 crore rupees to start flying again. The airline is in the midst of raising 250 crore rupees. DGCA remains skeptical of human resource adequacy at GoFirst. However, the airline reported having 340 pilots, 530 engineers and 680 cabin crew members despite massive resignations. But its ticketing agents are planning to boycott the airline if GoFirst begins flying without any clarity on refunds and credit shields for cancelled flights. Till date, the airline has said nothing on it, given speculations around its bankruptcy, and Insolvency Tribunal (NCLT) will begin hearings against the airline filed by 3 lessors who want to take back possession of 12 aircraft. It has also directed GoFirst's interim resolution professionals to reply within a week. Moving on, the Adani Group on Monday said it has repaid loans totaling $2.65 billion to complete a prepayment program to cut overall leverage in a bid to win back investor trust, post a damning report of US short seller Hindenburg Research. The group said it made a full prepayment of $2.15 billion of loans taken against shares of the group's listed companies and also another $700 million for the acquisition of Ambuja Cement. The prepayment was done along with interest payment of $203 million, it added. The promoters also completed the sale of shares in 4 listed group entities to GQG Partners for $1.87 billion. The group said that the net debt to EBITDA ratio has decreased from 3.81 in FY22 to 3.27 in FY23, while the EBITDA surged from 50,706 crore rupees in FY22 to 66,566 crore rupees in FY23. The rating agencies, both domestic and international agencies, have reaffirmed their ratings in all the group companies. Up next, higher brand fee paid by Vedanta, apart from record dividend, has helped Vedanta Resources, the London-based holding company of Vedanta Group, to pay part of its debt. Vedanta paid a brand fee of 2,632 crore rupees for 22-23, according to Nomura report quoted by Business Standard. This was after the Vedanta Resources raised the brand fee to 2% of the turnover for its Indian businesses in 2021. In 2021-22, Vedanta and its subsidiaries paid a brand fee of 1,553 crore rupees compared with 939 crore rupees of the brand fee paid in 2020-21. In 2017, Vedanta signed a 3-year brand license agreement with VRL for the use of the brand Vedanta, which stipulated a brand fee to VRL at 0.75% of the turnover of Vedanta. In FY23, VRL received 25,636 crore rupees of dividends from Vedanta, which was partly used to repay debt, said analysts. VRL owns a 68.1% stake in Vedanta, which in turn holds a 63% stake in Hindustan Zinc. Up next, domestic handset company Lava International may have put its plan for an initial public offering on hold. It may refile the draft papers with updated financial numbers and other operating metrics based on the internal discussions and market condition, according to industry sources. The company is presently looking to focus on its profitability and take benefit of the PLI scheme. Markets regulator Securities and Exchange Board of India in January had asked Lava to refile its papers with certain updates. In September 2021, Lava International had filed the draft papers with SEBI to raise 500 crore rupees via fresh issue of shares. The issue also comprised an offer for sale worth 43.7 million shares by the promoters. The company had proposed to utilize the fresh issue of funds on marketing activities, possible acquisitions and working capital requirements. And now the government may shut Mahanagar Telephone Nigam Limited (MTNL) and shift its staff and operations to BSNL. The government had earlier planned to merge the two companies. MTNL runs cellular and landline telephone services in Delhi and Mumbai. According to Mint newspaper, the company is almost 40,000 crore rupees in debt. Shutting MTNL will also entail delisting the company from stock exchanges, but it is not sure whether BSNL will be listed. BSNL seems to be in a better financial position. BSNL will begin offering 4G services by the end of the year. In FY23, BSNL revenue rose to 20,700 crore rupees with 8,161 crore rupees of losses. On the other hand, MTNL posted a revenue of 861 crore rupees, down from 1,069 crore rupees in FY22, and reported a loss of 2,910 crore rupees. BSNL and MTNL have been receiving relief packages from the government. They received 69,000 crore rupees in 2019 and BSNL received 1.64 lakh crore rupees in 2022. Right, then the resolution to reappoint Baba Kalyani as Bharat Forge Managing Director has been opposed by majority of institutional investors. As per the voting results published on the BSE, about 53.51% of institutional investors voted against the resolution last week, while the rest supported Kalyani's reappointment. But Kalyani will continue as the managing director, as the overall vote on the special resolution went in his favor thanks to the dominant promoter group vote. Promoters hold 45.25% stake in Bharat Forge. Among the promoter and promoter group votes, 75.45% went in favor of the proposal, while 24.55% went against it as per the exchange filing. For the quarter ending March 2023, the auto component and construction company reported a fall of 7% in net profit at 245 crore rupees compared to 262 crore rupees in the year-ago period. Its revenue from core operations jumped 19.3% to 1,997 crore rupees from 1,674 crore rupees in the fourth quarter of FY22. In other news, the 74-year-old Kalyani is also caught in a court battle with his sister Sugandha Hiremath over ownership of vehicle based on a 30-year-old family settlement. And now the Dharampal Satyapal Group on Tuesday announced the acquisition of the Goods Stuff Private Limited, which owns Love It Chocolate and confectionery brand. This acquisition will help DS Group enter the chocolate segment and strengthen its confectionery portfolio. It entered this segment in 2012 and owns brands such as Pass Pass, Maze, Chingles and Pulse. The Good Stuff was earlier owned by Goldman Sachs and Mitsui Ventures, but financial details of the deal were not available. The acquisition of Love It was a strategic decision to enhance the confectionery basket and enter the chocolate segment, DS Group Vice Chairman Rajiv Kumar said. Founded in 2014, the Good Stuff had a turnover of over 100 crore rupees in FY22, in which around 90% contribution was from the brand Love It. Now then, prominent VCs like Bain Capital, Advent International and Blackstone are vying for almost 60% stakeholding in India's largest fertility clinic chain, Indira IVF. This comes at a time when TA Associates, an existing investor, is diluting 47% of their holdings at a fourfold return on their 1,100 crore rupee investment. According to the Economic Times, the deal will peg Indira's IVF's valuation between 8,000 and 10,000 crore rupees. In 2023, Indira IVF generated 1,250 crore rupees in revenue. It also established its 116th center in Maharashtra in March 2023. As per an AIMS report, 10 to 15% of Indian couples face fertility issues owing to stressful lifestyle. The chain undertook over 40,000 IVF processes last year, leading India's $12 billion IVF market, out of which only 25% is organized. And Titan's plan to buy out jewelry retailer CaratLane has hit a hurdle. While Titan already owns 72.3% in the firm, issues have cropped up over the buyout value of the remaining 27.8% stake, which is held by 3 founders and other employees. According to ET, their 2021 agreement allowed Titan to purchase 21% stake per a pre-agreed formula. In March 2023, Bank of America valued CaratLane at around 7,000 crore rupees. This left the founder's stake at about 1,600 to 1,900 crore rupees, which they termed low. However, the final decision will be made subject to both parties agreeing on the average of their individual valuation exercise. Growing at a CAGR of 55%, the firm is valued at 23,066 crore rupees as per market estimates. ET reports that Titan may make another offer at 15,000 crore rupees valuation. CaratLane recorded 2,300 crore rupees worth of sales in 2023. Well, that was all on the corporates. Now let's take a look at those stocks that were buzzing today in the market and also analyze the reason behind it. First, BL Kashyap shares increased 4.73% today on the back of orders. The reason for increase is the new order. The company has got the order of 147 crore rupees, after which they zoomed. BL Kashyap is one of the leading construction company that builds townships, IT parks, institutions. Recent order was received from Zuri Pune Knowledge Park, and after that its order book stands at 2,774 crore rupees. The project is reported for civil and structural work. The timeline for execution is 27 months. And up next, MTAR Tech was buzzing during the day and it ended the session with more than 2% gain. During the day, it went up more than 3% but then witnessed some profit booking. The share has gained after its promoters sold stake and Plutus Wealth Management LLP bought them. Promoters offloaded 11.2 lakh shares and Plutus Wealth Management bought 13.15 lakh shares. MTAR Tech is a company that provides manufacturing solutions like specialized fabrication, advanced machining. And BHEL shares fell after global brokerage Nomura lowered the target price. Nomura cited factors such as weak gross margins and delayed order inflow. In light of this, it has reduced the EBITDA estimate by 13% for FY24 and 4% for FY25. As a result, brokerage house changed the rating from neutral to reduce in BHEL and also reduce the target price from 79 rupees to 61 rupees. And now it's time to shift our focus to the triggers that might trigger major events in the global business environment. First, retail sales figures for Eurozone to be released. The markets to get a major impact because of this. And the board meet of Alpha Transformers will happen today, and guess what? They might consider a rights issue. Then Anik Industries is set to consider audited accounts. And lastly, Jindal Cortex to discuss and approve accounts for 2022-23. And the Middle Kingdom of Asia, China, is set to release trade numbers, and also German industrial production figures will also be out tomorrow. And that's it for today here on Corporate Central. Download the Money9 app and stay tuned to Money9 English's YouTube channel. Also, check out money9.com for all the latest updates on business and personal finance. This is me, Ajay, signing off. See you all again tomorrow at the same time. Until then, take care and bye-bye.